Well, you're right, Charles. Fiat currencies do supplant each other over time, but it's a very slow process. Classic case, sterling was at its peak in about 1914. By 1944, Bretton Woods, it was sort of a footnote. But that took 30 years. It didn't happen overnight. So is the dollar running into a lot of headwinds? Actually, I always say that the world cannot destroy the dollar, but the U.S. can do it itself, and we're doing a pretty good job of that. But you're right. Dollar, round numbers, is about 60% of global payments. It's the currency of about 60% of global reserves, so it's still the king of the hill. You can forget about there's not going to be a gold-backed Chinese yuan. Forget about that. China doesn't have enough gold. Russian ruble is not going to displace it. Russia and China don't have the rule of law or the bond markets. Those are key things about being a reserve currency. The Bingx currency is coming along, but it's going to take another 5 to 10 years. The key thing there, it's easy to announce a currency, a payment currency. That's just a ledger entry. What you need is a large enough trading area where if I get some, I export and I get paid in Bingx, I can go shopping in 20 countries instead of 1 or 2 if I'm getting rubles or yuan. They're not there yet, but they're adding members every year. They'll add some more at the summit in Russia in October. That'll take a few more years. However, the rival to gold is already here, and it's the one you pointed to. The rival to the dollar, rather, is already here, and it's the one you pointed to. It's gold. Right now, by the way, very few people realize this. The United States has 70% of its reserves in gold. Now, we don't need foreign currencies because we print the dollar, but that's the data. Russia has 25% of its reserves in gold. China has about 8% of its reserves in gold. Those numbers are both going up. Interestingly, when you look at the IMF data on currency shares, they have dollar, euro, Canadian dollar, Australian dollar, and so forth. They give you all the data. You can compute the percentages quickly. They don't include gold, which is weird because the IMF itself has over 1,000 metric tons of gold. So when you put gold in the picture, 2 things are happening. Number one, the inversion was 2010. That's when central bank gold reserves started going up. That's accelerating. And now the U.S. is just a week away. June 13th, G7 summit in Italy. The U.S. is going to lead an effort to steal $300 billion of Russian-owned assets in the form of U.S. Treasury securities. When that happens, you're going to see again, the Treasury market's not going to collapse. I don't want to overstate this, but at the margin, if you can't trust the Treasury, do you really want Italian, German, or Japanese bonds? I don't think so. You're going to want gold.
Right.